Good morning. I'm Benjamin Sullivan, and welcome to Market Monday for June 22nd, 2026. Last week, we told you that even if you never buy a single share of SpaceX, you'll probably end up owning some anyway, without lifting a finger. Today, we'll discuss how that happens and how to separate the real news from the noise. First, the climb. Since it listed, SpaceX has seen a meteoric rise. The initial public offering was priced at $135 a share, and it briefly traded north of $200. That figure valued the company at $2.5 trillion, making SpaceX more valuable than Amazon in a little over a week. The reason is a low float, which is the amount of shares that are publicly available, combined with substantial investor appetite. SpaceX sold only about 5% of its equity to the public. Musk, the employees, and the early backers hold the rest, subject to a tiered lockup period. That means there is constrained supply of stock, and with far more buyers than sellers, for now at least. You may have seen the headline that SpaceX is being fast-tracked into the S&P 500 index. While that was mostly a rumor, here's the sliver of truth. It's true the people who run the S&P entertained the idea this spring, asking whether to waive the one-year wait in the profitability rule. On June 4th, however, they decided against it. SpaceX lost about $5 billion last year, so it doesn't qualify on the profits anyway. The earliest it could join is the middle of next year, and only if it's profitable by then. So the biggest wave of buying triggered by S&P inclusion, it isn't coming this year. Now that doesn't mean SpaceX isn't being added to any indices though. Two other index families changed their rules. The NASDAQ 100, or QQQ, as many of you know it, now admits a company this size after 15 trading days. So that'll be as soon as early July. The broader Russell and total market indices, tracked by index funds most Americans own, can add it only after 5 trading days, which is right about now. If you own a NASDAQ 100 fund, a total market fund, or a large cap index fund, you're about to own a piece of SpaceX, whether you choose it or not. Those funds aren't buying because they like the price. They're forced to. Forced buyers meeting that tiny float could be rocket fuel for the stock. There are 2 more headlines to examine. One is real and one is speculation. The real headline. Last Tuesday, SpaceX agreed to buy Cursor, an AI coding company, for $60 billion in an all-stock transaction. At SpaceX's massive valuation, $60 billion in stock buys a whole company while diluting shareholders by about 3%. Now for the rumor which you may have heard. SpaceX will merge with Tesla. While executives have hinted at it, and analysts have put high odds on it, as of today there's no firm deal. For now, the largest merger in history is just conjecture. So what's the takeaway? The index inclusion is real, but tailwinds are about flows, meaning who's forced to buy and when, not about value. SpaceX trades at more than 100 times its sales, and the low float lifting it won't last. Insiders who have waited more than a decade can start selling just after the company's first earnings report this summer, into a high price. If this stock is tempting you, ask yourself, what happens when the insiders start to sell? We'll revisit this after SpaceX's Q2 earnings, when the first lockup period ends. That's all we have for you today. As always, thank you for watching this week's edition of Market Monday. Join us again next Monday for more of the insights that matter to your money.